Anna, have you seen anything with respect to the suspension of the collection efforts from the IRS as to whether or not that would impact someone's ability to receive the relief payment, the stimulus check?
No, nothing has been, I haven't read anything that makes those two work together. Now, since the stimulus check is based on your 18 or 19 AGI, your IRA withdrawals are not going to hit your 18 or 19 yet. They will, if you take the IRA out and you're going to get taxed, let's say you elect for it to be taxed over 3 years. So 33,000 of 100,000 are going to be taxed in 2020. That 33,000 will increase your AGI in 2020. So if you already got your stimulus check based on 18 or 19, that's not going to penalize you or make you pay anything back. So we're going to have to watch out for those AGI limits in 2020 if you think you're going to qualify for the stimulus payments. It's all going to have to be a balancing act between all of these different things. But most certainly, taking out IRA in 2020 is not going to impact your 2019 AGI. There's a question I just noticed. What about those that are over 60? If you're over 60, you don't have early withdrawal penalty anyway. So the rules on the taxability still apply. So normally, if you're over 59 and a half and you take your IRA out, you're not subject to that 10% early withdrawal penalty. You're just subject to tax. So now you're back to these tax rules. If you take it out, you can elect for it to be taxed over 3 years. Or if you put it back over 3 years, you're not going to get taxed on the portion that's being put back. For those that want to mitigate some of the tax impact, if you don't need the cash, if you are subject to required minimum distributions, if you're 70 and a half, you don't have to take them. Okay, so you know, that's the other thing that's available.
Another point for further clarification on the $100,000 limit for the withdrawal, is that per account holder? Is that for the family? Is that for the married filing joint? How is that limitation?
I think that's going to be well, that's a good question. Let me see if I have anything immediately on it. That's something that I will look into a little bit more in detail. How I understand it, it's going to be probably per person. Probably for a combined, because typically when you look at your distributions from the accounts, it's all your IRA accounts. So I don't think it's going to be per account. I think it's going to be per person. But that's a good question. I'll make a note and see if I can find anything on that and get that answer out in our next newsletter.
Okay, perfect.
Yeah, this is all great. And I'm sure more stuff will be coming out. For those of you that have active 401k accounts, let's say you may be the realtor, but your spouse is working and it's got a 401k at work, and typically you can take a loan against the 401k. Again, those rules have been relaxed a little bit more. You can take up to $100,000 as a loan from the 401k account, and you can now take up to $100,000 of the fair market value in the 401k. As a loan. The interest on that loan will still accrue, but I'm sure there will be a lot more friendly terms on paying that back. So that's for those that have an active 401k, which allows you to borrow against it.
One more thing on the IRA withdrawal before you run away from that. If the 100,000 is recontributed in the 3 years, there's no withdrawal penalty and no taxable event, correct?
Correct. Absolutely right.
Perfect.
Absolutely right.
Now, do you have clarification on unemployment in terms of, Phyllis is asking if you have a closing still coming up and it might still occur, can you still apply for unemployment, or does that pending closing prevent her from filing?
I don't think that's going to prevent you from filing because, again, being self-employed, applying for unemployment is completely brand new. I have read that they have relaxed the rules for, you know, typically when you apply for unemployment as a person who works, they make you show that you're looking for other work, and there's requirements like that. They're even relaxing those requirements for people that are working, that were working. Obviously, they could be looking for work, but there's no work. So I would imagine that this sort of requirement is not going to penalize you from being able to apply. Now, how they're going to police once you have the unemployment, that you have other income, I think that's the unknown part about applying as self-employed. So I'll keep reading about those rules, and if there's anything, you know, new or more guidance about that, I will. That's the other good point that we can, you know, once we learn a little bit more, we can put out in our newsletter. So yeah, there's been a lot of questions about that. It's a big thing. I mean, it's just new, again, with self-employed people being able to apply.
Yeah, it's not just new for this program. It's new historically. These types of jobs were never eligible for this. So the folks who even write the rules didn't have a baseline of even everything to consider as a result of that. So your patience and frequent checkbacks is really going to be the way to address that. We're waiting for more clarification. It's coming down every day. We got further clarification last night on some of the stuff that I'm going to get to in just a minute. So we're going to see that on both sides. Keep popping back in, keep reading the newsletters, and we'll keep everybody up to date as we do these updates. That's exactly why we're going to continue to do them.
Absolutely. And, you know, with the unemployment stuff, it's state by state. Sometimes even when you Google and other states' results pop up, other states are doing slightly different things. So if you're Googling around and you're finding that here and there, I mean, I just looked, I had a client ask me a question and I tried to quickly Google to see the result, and there was something from state of Washington or some other state where they were getting 2 or 3 types of benefits at the same time. And then I checked and I said, well, in Florida, we don't. So also be very careful as you're doing your own research or talking to people that unemployment is a state, it's not a federal issue, it's a state issue. So every state is gonna have slightly different rules. So that's important to keep in mind. All right, I'll mention a few other things before going on to the loans. Donations, at this point, you will be able to, for 2020, deduct up to $300 in cash donations above the line, meaning it's not going to go into your miscellaneous deductions bucket. So even if you end up taking standard deductions, but you were charitable this year and donated to, you know, charities in need, you'll be able to take that in addition to your standard deduction. So that's up to $300. The other thing I wanted to mention is the losses. So these net operating losses, it's always been kind of a gray area, but if you've got a loss from your business, last year, the new tax law in 2018 was trying to limit the loss to 80% of the loss being able to use against your income moving forward. So now they've done away with that provision. So if you've got a business loss that results from last year or this year, you can use 100% of that loss against any of your other income. If all you have is a net business loss after you've used it against other income, you can carry that loss back. Now, this is very important because carrybacks have been disallowed for several years now. What does that mean? If you've got a net operating loss on your tax return, normally you have to wait until next year to apply it to other income. You can file a carryback request and it's going to get you a refund of last year, the year before. You can carry it back up to 5 years. So that's going to get you the advantage of that business loss faster. Now remember, it's got to be a net loss. So if you've got pensions, wages, if you're filing a joint return, let's say you've got a loss from your real estate activities, but your husband has a W-2, so on a net basis, you guys were still positive. That's not a net business loss. If you're a realtor and your net income ends up being a net business loss on your tax return, we can carry that back and ask for a refund of the taxes you paid 5 years ago, 4 years ago, 3 years ago. That's a big deal because you can get that refund faster than waiting for next year to utilize that loss. That is important. So we're going to be also looking at those tax returns. The loss, that provision also, they're saying that it's even the 2018 losses are going to be subject to the carryback rule. So we're going to pull our tax returns for people that we already filed in 18 and 19 that we've already filed. If they've got a net operating loss carryover, we're going to reach out to you and say, hey, we should do a carryback so you can get that money faster. Okay, that's a pretty big deal and very, very friendly. I think the only other thing I wanted to mention for you guys is those of you that are PLLCs, your annual reports with Florida normally would be due right now. They are not due until July 1st. So Florida, the Sunbiz is giving you a little bit of a break. So if you, in all the flurry of disaster, forgot to file the renewal, don't worry. You've got until July 1st it's $138 to renew. If you go past July 1st, then the late filing is $400. So that's also very important, because the days flow into weeks, into months, and it's easy to lose track. I just looked and I couldn't even realize that in my normal world, I would have one more week of tax season left. And now I'm in the middle of all of this, and I just realized
that's not happening.
Exactly. And then I just thought, oh my God, you know, our LLC renewal, did we renew? And then I thought, okay, wait a minute, we have until July 1st. So I sometimes forget to mention that when we're doing these webinars, but I want to bring it up. If you're lost on days and you've got your LLC and your PLLC and you're properly operating under that legal structure, please don't worry that your those renewals are not due until July 1st. I think that's all I wanted to mention before I turn it over to Joanne. You know, I'll keep watching for more questions, and we'll just keep doing more research, guys.
Perfect. Thanks so much, Marina. That is incredibly helpful. Like we said, we'll continue to bring those developments as they come. I want to switch gears from stimulus checks and tax and unemployment into the programs that have been passed that are available. There's an alphabet soup out there right now. We've spent the better part of the last 2 weeks diving into this so that we can really try to get a handle on exactly what is available and what the questions are, where the gray areas are, because of course everybody can jump on and read there's a ton of bullet pointed charts. Those are great. But that's the devil's in the details, and how do you actually carry this out? That's what we're going to try to serve as a resource for you to do. So there's 3 essential programs I want to talk about today. The first is the Payroll Protection Program, or PPP, as you may have heard to death about it. Number 1, there's a virus. Did you know? Number 2, there's PPP. That's all you can hear about if you put any kind of news or social media or anything like that on. So the PPP program is essentially a stimulus package to encourage small businesses. There's no limit on, it could be sole proprietor, it could be one person, up to 500 employees, to make sure that the business can keep running and keep paying employees rather than having people sit home and collect unemployment. This is a nice package. This is something absolutely every single person who's eligible should apply for. The benefits of the PPP, there are multiples. It is the guidelines to say that you were impacted are much more relaxed than some of the other programs. The requirement is that the uncertainty of the current economic conditions make this loan necessary for the ongoing operation of the business. I can't think of a business you'd be in unless you are Amazon or FedEx, where there isn't some uncertainty causing a need to have support for this ongoing operation. So those types of businesses, logistics and things, may not have any issue, but obviously as realtors, there is uncertainty. Even if your closings are staying together for now, we don't know what's coming. We don't know what the impact will be as this continues, and for how long will this continue. So every single person on this call, if you are a realtor, whether you are by yourself or on a team, should be applying for this PPP package. You have to apply through your local financial institution. Every single SBA 7A lender, which is a particular program through the SBA that's been in existence for a long time, is an eligible participating lender. There are other lenders who are not 7A lenders who also are available. If you need help on getting a list of who can do this, just shoot us an email and let us know, because there are lenders that will work with people who have not had a relationship there before. The SBA is encouraging you to go to your existing bank. That is the preferred manner that you go, where you have a business checking account right now. But if you were relatively new and you didn't have a business checking account, this will definitely strengthen my argument for all the PLLC people I've been talking about who said, nah, there's benefit here to being organized. You don't have to be a PLLC to participate here, but if you were on that program, it certainly will make the application process easier. The maximum amount of the loan is 2.5 times the average monthly payroll cost over the last 12 months. This means even if you are a realtor by yourself, we're looking at your average gross commission income over the last 12 months. So if you read any of the materials with respect to the PPP program, they're going to talk about supporting documentation required to support this number as being, 940, 941 payroll tax returns, W-2s and W-3s. You're not going to have that if you're an individual realtor, and that's okay. We are going to use 1099, statements from your brokerage. There are ways to substantiate your income. So don't be alarmed when you're reading materials if you don't see something that applies to you. This program applies to you. We'll just need to document the income. You have until June 30th to make your application, although we are being implored to please get the applications in early. The government wants to get this money in people's hands, and there is a bunch of fear that this is going to run out of money. Keep in mind, patients, anytime there's a program like this, the implementation is always difficult. This program didn't exist a month ago, and the entire SBA lending nationwide last year was $20 billion. This program alone is administering $349 billion. So nothing with the government is fast. They're doing yeoman's work in terms of getting this up to speed, and it's never going to be fast enough, but they are actually really cranking to try to get this thing out. There is also talk about dumping another $250 billion into this. So stay tuned. Don't be alarmed about them running out of money and you being, the jig being up and musical chairs and you have no seat to sit in. They will continue to fund this. It's absolutely a priority to keep this money in the hands of small businesses. What can you use to pay for it? So the maximum loan amount you can take is 2.5 times the payroll or your gross commission income. But payroll and commissions aren't the only things that can be paid with this loan amount. You can also pay costs if you do have an administrative assistant and you're paying healthcare benefits, medical or family leave, paid time off, retirement benefits, sick leave for any illness, not just COVID, mortgage interest payments, but not the principal. If you have a mortgage for, your brokerage or something like that. Rent, if you are paying a rent, can be paid. Interest on debt, but not the principal. Any of the business debt, we can use these funds to pay the interest, and utilities. Now, one of the big benefits of this program is that the debt is forgivable, meaning you don't have to pay it back. In order for the debt to be forgiven, you must evidence that during the 8-week period after following the origination of this loan, that you're using it to pay payroll costs, mortgage interest, rent, utility payments. It has to be used for those acceptable purposes. You can't pay, your MLS dues or photography fees. It's not for your operating costs. It's specifically for payroll and the housing, if you will, of the business. You must use 75% of that loan on the payroll. The balance, the 25% of the loan, can be used on those other eligible expenses. So be mindful of that. If you have an existing employee and if you reduce their payroll wages because of this, your debt forgiveness portion of this PPP loan will be reduced if you reduce the commission or the payroll for an admin person more than 25%. If you go down 15%, it's not going to impact your debt forgiveness portion. If you have already let someone go, you can restore them, either their head count or their salary amount by the end of June, and still have this correction count and be included in the debt forgiveness. So for that, you want to make sure that, they're trying to make sure that people are getting their money. The 2.5 times the average monthly payroll is the words that you're going to see used in any of the statutes or reviews of this, but your payroll as a realtor is your gross commission, okay? Doesn't matter if you don't have any other employees, that's fine. This is still, we're looking just at your commission. If you have a buyer's agent, if you have an administrative assistant, or a buyer's agent that's on W-2, that's not having their own commissions, but you're W-2ing them, then this would include their salary average at 2.5 times as well. So keep that in mind.
Joanne, I'm going to interrupt you here because this came up yesterday a few times, even in my emails. So if you are also on payroll and you pay yourself a reasonable compensation, which many of you do, which is just a smaller portion of your commission, what that is for tax purposes has nothing to do with the number you're going to use for the application. So if your gross commission is a certain number, your own W-2 is a much smaller number. You, for yourself, for compensation, are going to use your gross commission. If you're paying an assistant with a W-2, their W-2 is the wage that you're going to use. But for yourself, don't use your W-2, which is a fraction of your commission. Use your commission.
Yeah, absolutely. The other thing is what we're talking about here applies to you as a realtor. I'm going to talk about teams when we finish this up. This applies to you as a realtor, whether you have formed PLLC and are taxed as an S Corp or you're still on Schedule C. So this treatment of 2.5 times your gross commission income is going to be identical whether or not you have done PLLC. The only way that we're going to change our recommendation on how you submit this is if you're on a team, and we're going to do that as soon as I get through the end of this.
So Joanne, when they fill out the application and it's asking you who you are, there's a lot of different boxes. There's boxes that say LLC, PLLC, S Corps, partnerships, self-employed, commission. Who are these people?
Well, what's really funny is I spend a good amount of time as a lawyer trying to teach people you can't be an S Corp. You are an LLC and you are taxed as an S Corp. I have my menu with dinner and dessert where I say at the entity level, at the state level, you're choosing to be an LLC. You're just asking the IRS, please tax me like an S corporation. So I was disappointed when I saw the application, although surprisingly, no one consulted with me about how to set it up. So here goes the SBA without the counsel of Attorney Coons. I don't know what they were doing, but the top of that form, if you are a PLLC, taxed as an S corporation, you are going to check that S corporation box on the top of the application. Let me say, if you don't know how you're taxed, call your tax preparer. Take a look at your old form. Pull out last year's tax return. If you see 1120S, like Sam, then you are an S corporation. If you are reporting your income from your real estate activity on Schedule C, come see me because you're paying too much tax, but you are, you're going to check that independent contractor box on the top of that application. Also, don't be alarmed. The application is readily available online. If you'd like, if you email us, we can send you a draft copy as well. It's nice to have that filled out before you get on the phone with the bank. Some of the banks are taking applications over the phone. Some have online portals. The online portals don't necessarily match the SBA's application. It was a suggested form. It wasn't mandatory. So if the application presents differently, don't be alarmed. That program is given out by the SBA, but it is administered by each lender. So just like your clients see different requirements from each lender when they're buying property, you're going to see a difference. If your friend is at Chase versus at Bank of America, the input screens may look different. So don't let that trip you up. The business had to be open. You had to at least be a realtor by February 15th. So if you were a new business and you don't have 12 months of income to show, they're going to look at your average for the time that you were in business, like January and February, for example, if you were a relatively new business. So don't be alarmed there that you don't have 12 months of income. The interest rate for any portion of this PPP loan that may not be subject to debt forgiveness because you used it on something other than payroll is going to be 1%. This is per the rules that were issued by the SBA. If you Google around, you will see the maximum under the statute that they can charge is 4%. But the SBA has issued guidance saying right now they're going to be charging 1%. In the beginning of this, before the program even launched, they were saying 0.5%. So again, if you're hearing conflicting information, understand this is fluid and it is changing every day. So it's not even that another professional gave you incorrect advice. But on April 1st, it was 0.5%, and on April 2nd, it went to 1%. So stay tuned. They're giving us revisions every day. If you do have a portion of this that is required to be repaid, there's a payment deferral of 6 months. So you won't owe a payment for 6 months. The amortization period of this loan is 2 years. So it's a nice low interest rate, but the amortization period is small. There's a maximum, again, under the statute of that of 10 years, but for right now, the SBA is recommending 2 years unless there's a special circumstance. You do have to go to your participating bank. I saw in the list of questions, someone said, hey, I heard Wells Fargo is not taking applications. Wells Fargo got a bad boy penalty from all the fake business bank accounts that they were opening. So they do have less capacity to process these applications at this point than other banks. So if you do get, I don't know how that will unfold. The government isn't going to want to see you as a customer of Wells Fargo be penalized and have no access to this money simply because you happen to be banking there. So I would stay tuned on that. I do expect there's got to be some loosening of that, and maybe it will come if they do another round of money. I haven't seen anybody personally say Wells Fargo turned them away, but I have heard that rumbling that they are going to be having a limit on the applications that they can take. For the PPP loan to be forgiven, you can spend more than 75%, but that's the minimum. If they're not looking to subsidize your entire rent, they're looking to really subsidize people. This is in lieu of unemployment, really. So keep in mind about that. There are fees to take the loan, and that is 5% of any loan amount that's $350,000 or less. So that's going to be the points, if you will, to take the loan. But all of the regular traditional SBA fees are waived. You'll customarily hear people say SBA loans are more expensive to take. All of those fees for this program have been waived. So no worries there. There are fees that, like I said, are permissible to the lenders. The government is encouraging lenders to process these loans. 1% is not going to keep the house open for the bank. So they had to do something kind of somewhere. And that's kind of PPP in a nutshell for individual agents. If you are a team, same rules apply, but how we process the application will be different. It's still 2.5%, 2.5 times the average payroll. The average payroll on a team is going to be the gross commissions for the team. Now, keep in mind, teams can't be licensed by FREC. So we may have, Marina and I are on a team. Do you like being my teammate?
Most of the time.
What more could you
Not
possibly
always.
want?
Exactly.
So you can't get a license for Team Kuntz, but my PLLC and Marina's PLLC are both going to receive commissions. Now, our brokerage might provide incentives so that all of the revenue runs through me. We're still teammates, but every closing gets processed under my name. So what happens in that case is you take all of the gross commission from my PLLC and you contribute it up to Team Kuntz in the S-Corp return. This is what should be happening. Anyways, so then all of the team expenses are paid out of that team LLC. So I'm not paying individual for photography or super key fees or continuing ed fees. We're doing all of that out of the team. So we're going to process our PPP application for Team Kuntz, and we're going to show, let's say we are certainly going to be top producers because, we know so much. Because it's easy. You just drive people around and they throw the money out the window is the word on the street. Poor agents. Mm-hmm. That was sarcastic. If anybody, I can't hear you laughing, and you guys know that's how I like my presentations. I like to hear the chuckles. So anyways, we're going to process the team application for the PPP. The 2.5 times the payroll is going to include any gross commissions that have been rolled up into the team. So it's going to be all of my commission, 2 of us, and if we had an admin person. So we're each going to get that. There's a $100,000 maximum. So no matter what your income is for any employee or yourself, the maximum per employee is $100,000. So let's say our team makes $500,000. We could put in an application at $100,000 for myself as an employee of Team Kuntz, one, also included in our calculation would be $100,000 for Marina. And let's say we have an admin person that's making $50,000. So we would have $250,000 of annual income divided by 12, multiplied by 2.5 times, and that would be our average monthly payroll cost. Even though Marina and I may not run a payroll, we may not get a W-2 for $100,000, that's still how we're going to come up with that calculation. If you're making $100,000, that limitation is for cash compensation. Non-cash compensation like health insurance benefits, retirement benefits, or paid time off are in addition for everybody, any employee, but even the employees that maxed out at the 100,000. So if I was 100,000, you could put on top of that 100 those non-cash benefits like the health insurance, retirement, and time off. So we're going to submit that application under the team. We're going to be able to substantiate the team income based on my 1099 from my brokerage, because remember, I'm the one who submitted all of the closings under my name. And then we're going to show that there's 3 employees, myself, Marina, and our assistant, and that's where I'm going to derive that $250,000 average number. This is the piece that's different than if I was a realtor by myself. So if both Marina and I were realtors, but we didn't form a team, therefore we couldn't have an S corporation for the team, now you have a problem. And this can happen with spouses. If everything got put under me and we never did a team, now I might have $200,000 or $300,000 or $400,000 of income, but I'm seen as the only employee. So without an actual team LLC and a separate S Corp tax return, if you are just husband and wife realtors with the license in your individual name, you're going to be limited at that 100 and not have the ability to spread it out between you and your partner. Insert bad news here. So questions on PPP? I do see some lined up. Do you want to?
Yeah, what I've been doing is if there's some little clarifications, I've been answering them, but let me read a couple of that I think would be beneficial if we go over them.
Okay.
So first of all, if you don't have a business account in the bank, let's say Chase, for example, what are some of the options? Have you heard of any banks that will take you now, or what's going on there?
There are a few, and we can help you get to those places. There's one particularly that I haven't worked with, but certainly we're getting information like that from some of our resources, so we can compile a list and put it on our blog and get that out to you guys. They don't have to have you as an existing client. It's the firm. A lot of the banks took that as their policy so that they could better service their existing clients and not have their system bogged down with people who they were not working with. But what started to happen was, if you were banking, say, at Northern Trust, they're not an SBA lender, they weren't able to help you. And so then some banks said, well, that's really not fair, that just because of where you happen to have your checking account, you can't get any help. The other clarification I'll make is on the Bank of America rules. Initially, they said you not only had to have a checking account, but that you also had to have a lending relationship. That included credit cards, but they have relaxed that rule now. My understanding is it's still, as of yesterday, was on their website that you had to have a lending relationship. But from the folks in the upper management at Bank of America that we've communicated with, they have indicated that that rule has been relaxed. So like I said, this is fluid, things keep changing, keep popping in, keep asking questions, and stay on that.
And I made a note that if we can put together some of those names of the banks, that we can send that out as a blog. So I've got a note to do that. Question, where on your S Corp, or if you are personal, would you find where your average gross commission is? So if you have not yet filed your 2019 return, please use your 1099 that you get from the brokerage. That is your total gross commission. And when you're asked to put average, just average that over 12 months. If you only worked for 6 months, I would average that over 6 months. So if you had a full year of 2019, you don't have the tax return yet done, I would use the 1099. If you don't get a 1099 from your brokerage, because let's say you are an S Corp or PLLC, and oftentimes brokerages don't give you 1099 because you're a business, just use full, your annual earnings from the brokerage. There's got to be a statement, and use that as your commission and use the average. If you file the tax return, if you're an S Corp, it's going to be on the very first page of the S Corp, the top line, I think it's line 1, that says your gross revenue. That was your gross commission, and then average that number. If you're reporting under Schedule C of your personal tax return, again, it's going to be the very top line of Schedule C that says your gross revenue. That is where we put the gross commissions, and that's the number you use to, again, average that. Again, what I would do is, if you work less than 12 months in 19, I would average your commission by the number of months that you did work. If you just got into real estate 6 months and you started earning in June, then average that over 6 months. I have not heard anything, and maybe Joanne have, on if they really require you to average over 12 months. I think it's really averaged by month of last year.
Yeah, I've been giving the same advice. Annualize it if you were not, in business the entire time. They already indicated that if you only had 2 months of activity, so I would say it's reasonable to do it for 6 or 8 or 10 months as well. They're not looking to penalize you. So again, there's a lot of this where there's not clarity to the rule, but people who aren't tax people and people who aren't business people wrote these rules. So just like the Dodd-Frank Act didn't always make sense, you're going to find things here that just don't add up. So they don't make any sense there at all either. And it's frustrating, but we're going to have to do something about it. I appreciate Eileen Gillen laughing. That really.
Yes, I did see that, Eileen. Very nice.
I do have to mention. Thank you so much, because I do thrive on live feedback, and this format is great because you can see me, but not being able to see you is a little bit sad for me. So
that's okay. I can call you and offer you all my Snyder remarks.
Yes, I know, but I get those by text. I get them in multiple media at this point in time. So before I move on to EIDL, that covers PPP for individual realtors and for teams. The PPP, please apply as quickly as you can. This is forgivable. There's not one good reason not to. You just have to show that you have uncertainty in the current economic condition, which is the entire country. So you don't have to already have closings that have died. Please, please, please take advantage of this program.
One other thing too, before we move on with the forgiveness part. So there's still confusion about the 75% used for payroll. If you are applying using your commission income, how do you prove that you've used 75 for payroll? There's a couple of questions. Do we need to increase our payroll? No, you don't need to actually increase your payroll. If you're still taking reasonable compensation, which is a percentage, still do that. I don't think we're sure yet on how that is going to get determined. If you're self-employed and you don't even have payroll, it's just your gross commission, I would imagine that there's not going to be much of the policing on how it is that you use the money, because that's the money you use to live on. What I would do until there's further guidance is just keep track of your expenses, and you're going to use whatever money comes in, you're going to use that to live. So if you are taking reasonable compensation, keep taking that. Do not increase your payroll if you do have payroll. If you're an independent contractor, you don't have an S Corp, you don't have payroll, I would just say, keep track of just your expenses, because we're not sure yet how that 75% forgiveness portion is going to work for those independent contractors. So as we know more, we're going to get that to you guys. So I guess the key is, don't take that money and pay off old credit card. Don't take that money and renovate your house while you're sitting home. Don't take that money and go on vacation. But you're going to have your regular expenses, your life, your house, your rent, your mortgage, and so on. So I would just probably track that and not have any of those weird outlying expenses in the 8-week period after you get the loan. But most certainly don't up your payroll if you already have a small portion of it that you are taking in payroll. Keep that going as it is.
Correct. Now, let me clarify one more time. If it is you only as the realtor, you are applying under PPP as an independent contractor, because you are an independent contractor of your brokerage. if you have a team or you have an administrative assistant, whether you have a PLLC or a team LLC or not, you can apply as the small business and self-employed and show one employee with your administrative assistant. So you're going to show their payroll, their W-2, and your commission income so that there's two people for PPP purposes, okay? All right, let's move on to the EIDL, or the Economic Injury Disaster Loan. This is what I like to call Plan B. There's nobody that I would say shouldn't apply for PPP if you're eligible. There will be some folks who aren't going to get as much benefit out of PPP in other businesses, but in real estate, I don't see anybody who, if you have any commission, you're going to get some PPP. You may not be getting enough, so you may, as Plan B, want to look towards the EIDL loan. The EIDL loan is also administered through the SBA. The Economic Injury Disaster Loan is a fund that has been established in the past that SBA turns on and off as there are crises, whether they be weather disasters or anything like that. These loans get opened and closed, the opportunity to apply for them as things happen. You just must have, again, less than 500 employees, but now you have to demonstrate substantial economic injury. So you can't just say, well, I don't know what's going to happen if you're going to take this EIDL loan. You apply for the EIDL loan directly on the SBA website. We'll provide the exact link on our website for you, but you can go straight to sba.gov and you can navigate there. The maximum amount of the loan is $2 million. It is based on 6 months of operating costs of the business. So you can use this for, it's more broad, what types of business expenses you can use this loan for. And the deadline to apply is open until December 31st of this year. So you can get this money after your PPP money runs out if you still need money. It's available to be used for the same expenses as PPP, payroll, sick leave, etc. But you cannot use the same expense to apply under both. So you can't take payroll under PPP and payroll under EIDL. So if you took payroll under PPP, then you could use EIDL to maybe put your materials costs, advertising, you know, if you bought supplies and things like that, you could put those types of things under your EIDL loan that were not eligible to be paid for by the PPP loan, but you can't double dip and take payroll in both locations. The EIDL loan also has a component of an emergency grant of $10,000. If you are a realtor and you desperately need money, you can apply for that emergency grant. Their aspirational desire is to have that in your bank account within 3 days. If you apply only for the $10,000, you can. If you apply for a $2 million EIDL loan, they will give you the $10,000 without any underwriting or without any examination of that. You get that automatically. That grant only needs to be repaid if you use it for something that's not one of the permitted expenses of the EIDL loan. So you still can't, not that there's anywhere to go on vacation right now, but you can't use it for something that's not already one of the covered expenses. Any amount over that $10,000 must be repaid. It's 3.75% interest and it's amortized over 30 years. So you're gonna get a nice low payment out of that, but you're not gonna get any debt forgiveness, which is why it's preferable to hit up through the PPP program rather than going through EIDL if that's enough to get you where you need to be. If the loan amount is for the EIDL program is under $25,000, there's no collateral required. And if it's under $200,000, they're not requiring any personal guarantee. That's new. When this first opened, they said there would be underwriting and personal guarantees and collateral required for the EIDL loan, but they've relaxed that over the last week. And the requirements to get approved for that, the credit underwriting is also being very relaxed. So you still have it's still an underwriting process. There is absolutely no personal guarantee or collateral required under PPP, and it's been pretty loosened up under the EIDL loan. With respect to the tax treatment of the debt forgiveness, under the PPP loan, it's completely tax-free. They've already said that. It's assumed by the scholars that it will also be excluded under EIDL, but that's not been clarified yet. I don't have a, statute I can point to prove that to you. So keep that in mind. So the EIDL loan is faster in terms of the $10,000. If you get that $10,000 and you apply for PPP, that $10,000 will be included in the debt forgiveness portion of the PPP loan. So you can't double dip on that either. Marina, you have anything else that you want to jump in?
I do. There's a great question about somebody who's just getting into business, about what they're eligible on. This is a very, very good question because we did not talk about the dates. So from what I understand, with the PPP loan, in order for you to be eligible, you have to be in business as of February 15th.
Yes.
So this is to prevent those startups that don't have any money anyway to be getting these loans to cover their expenses where they really haven't gotten off the ground. So if you were really, if you haven't earned any commission, if you're just getting in the business, you may be doing some advertising, you may be getting your license or whatnot, I don't believe that you will be eligible for the PPP if you haven't had any commissions in 19 or 20 up to date. Is that your understanding, Joanne?
Yeah, you've got to be open and at least operating by February 15th for PPP and January 30th for EIDL.
Exactly. So for those people that are kind of still at the very beginning of their real estate venture undertaking, I would say probably the unemployment may be a good option.
Mm-hmm. Yeah. All right. The last, before I'm going to move on then, the last topic I want to hit real quick, I want to be respectful of everybody's time and we are coming to the close of the hour. There is the Florida bridge loan, and that's something else that you need to be mindful of. There is more guidance that we need from that. Florida emergency bridge loan is also an existing emergency program that was created in the wake of Hurricane Andrew. All Florida counties have already been deemed eligible, so you don't have to do anything to prove, location-wise, other than that the business is in Florida, so there's nothing to worry about there. You can get up to $50,000 on that loan. There are certain circumstances where you can push it to 100. It's interest-free for 1 year, which is really nice. But after 1 year, it jumps to 12%. So we need to be cognizant that we're not going to hold that bridge loan money for too long. Also keep in mind that all of these programs have been written by different agencies and they're being carried out by different agencies and banks. So the rules don't play nice together. So you need to make sure before you run off and apply that you know what you're doing and why. The Florida bridge loan, for example, states that you are required to repay it if you receive other disaster funds. So that means if you get your PPP loan and you already had a Florida bridge loan, you would be required by the bridge loan rules to use your PPP money to pay back this bridge loan. Meanwhile, we just got done telling you that's not a permitted use of the PPP. So you have to be very careful because you can get caught in the crosshairs where you're violating one of the rules if you aren't careful. So be very mindful of that. The application deadline on the bridge loan is open until May 8th. They may extend that, but right now that's where that is. You also are required to have 2 employees. Of course, there's no guidance on this yet as to whether you count as an employee. If it's you as a realtor and your administrative assistant, do you have 1 or 2 employees? I can't tell you that today because we haven't gotten guidance. This is administered through the Florida Department of Economic Opportunity. So you can jump on their website to apply for that. And that will be, those are also supposed to be very quickly processed. You do have to demonstrate economic injury, which is not difficult for an agent in these times. So I don't see any issues there. It's just really probably going to be your last resort, although it has the shortest time frame to apply. So stay tuned on whether that gets extended or how that gets treated. I did see a question pop up that said, so you can't get the PPP and take the emergency grant for $10,000. You can get the emergency grant for $10,000 immediately, but it's going to then get lumped into your PPP loan. Like I said, the EIDL program has existed. That's been open since January. So if you already have an EIDL loan, when you apply for PPP, it's going to all get refinanced together. So the $10,000 under EIDL will just count towards debt forgiveness under PPP. So essentially, it'll be converting that $10,000 that's extra, if you will, that you got from EIDL into the 1% to your payment plan under PPP, because it reduces your debt forgiveness there that you otherwise would be entitled to. You can't deduct your full PPP and the $10,000 from EIDL. Okay. That takes us to our 1 o'clock cutoff. If you have additional questions, please email us. Please keep tuning in. Like I said, we'll continue to provide these webinars, not only in general, but we will continue to provide them to realtors in specific. If you have questions or anything that we can do to help, shoot us an email and let us know so that we can make sure that the topics that we're providing to you are exactly what you need to know. If you are a realtor by yourself, the independent contractor aspect of PPP opens this Friday, April 10th. If you are a team, you had the opportunity to apply starting last Friday, April 3rd. So keep those timeframes in mind. We'll get a list up to you for lenders if you need somewhere to go that your bank is not participating. I did see someone say Wells Fargo closed SBA applications as of today. I don't, you know, it's hard to talk to you guys and stay up on the news. So if that happened this morning, I'm just haven't read that yet. If you do need anything, we're here to support you. We will continue to bring you the latest developments. This is fluid. Stay safe, stay informed, and stay in touch if you need us.
Thank you, guys.
Thanks, everybody. Have a great day. Bye-bye.